Hello and welcome to FinextraTV. I'm Hannah Wallace. Joining me in the studio today is Josh West, Senior Principal Solution Architect, Global Financial Services for Red Hat. So Josh, thank you very much for joining us in the studio.
And thanks for having me.
Really good to have you on and talking about a very interesting topic off the back of a recent article you did with us that looks at the move to public cloud and achieving economies of scale. It'd be great if you could kickstart the interview by telling us what needs to be considered when choosing a public cloud provider. So let's start there.
Sure, there's so many considerations when choosing public cloud providers. There's several lenses that we try to look through. The first is the fiscal partnership. What are the cost drivers and what's the overall commitment that the bank has made or the financial firm has made to a given public cloud provider? And these days, it's not just one public cloud, it's many, or usually up to 3 or 4 public cloud providers or hyperscalers. Mm-hmm. So you're looking through that fiscal partnership lens, and that really drives the behaviors of the various staff and what capabilities you want to tap into, but it's usually also unfettered to any capability the public cloud provider has as well. You also have to consider the global reach and scale, where the data is going to live, the safety and soundness and resilience considerations, but most of all, you have to be really considering where are you going to be driving the business experimentation through new capabilities that are going to delight customers, especially in the markets of the world that you're trying to reach.
All right, and coming back to the headline of the article, how can we achieve economies of scale and what kind of platform is required to do that?
I think the short answer is that you kind of need all of the platforms, but in the end, you need a lot of consistency for line of business developers or people really creating applications and experimentations and trying to drive new business value. Switching between different tool sets and different skill sets drives a lot of uncertainty and doubt in which door they should be going through to try to drive these new capabilities. So from a CIO perspective or someone who's really driving the change, they need to be considering how do they provide a consistent experience no matter which public cloud people are providing. How do you drive blueprints and patterns and communities of practice that people will continue to be able to reliably deliver this new value in new ways? And so what we saw before was that people were, had different teams potentially for different public clouds, and that caused a challenge where people were competing for the very same workloads and not driving new innovation, but trying to get it to their team's capability. So the major shift we've seen these days has been this trend of platform engineering, where one team, consolidated team, is looking at the global scope of all the hyperscalers that they might be partnering with, as well as the data centers that they manage themselves, and how they provide a consistent experience to consume any public cloud or services on premises. And for us, this comes in a lot where people don't want to engineer and manage 4 distributions of Linux or Kubernetes,
Sure.
Or other capabilities like serverless that are really drive this change. That should be the same across each public cloud or on-prem or otherwise as well.
All right, that's interesting. So what about this decision deciding whether an application is decommissioned or indeed reinvented? What about that?
So as people move to public cloud, it's not just new infrastructure, it's kind of a new way of working as well. Historically, financial firms operated in this model where they were building massive systems, transactional payment systems and otherwise, with large projects, a lot of manual work as well. As people move to public cloud into this infrastructure as code and other technologies that really drive the ability to automate most of the work that you do that's repetitive, you're allowing people to focus on continuous improvement of each application and continuous delivery of those, hopefully providing new capabilities with every quarter or every week or even more frequent when you manage those applications. Applications that are not a good fit or will not continue to serve customers will be decommissioned. But when it comes to choosing the right cloud provider, you're looking for how can you fit the right technologies, give the best capabilities, and allow you to continuously evolve it, and again, delight your customers in the end and reach new markets and otherwise.
So taking all of that into account then, it leads me to ask when tier 1 banks are going to be on the cloud 100%?
What we're seeing today, we had a lot of major financial firms say that they were going all to any one given public cloud provider. But these days we see that they understand that the cost of moving 100% to cloud is actually higher unless they're consuming the highest level of abstractions on each public cloud. And so instead, what we're seeing is that people are trying to tap into the most innovative capabilities, especially with the arms race when it comes to artificial intelligence. But then still run things that should be more consistent on premises. So a few banks are already saying that they're 80% of the way to public cloud, and others are saying that their strategy is going to be 70% on-prem going forward as well. So where we land in the future, I think we'll see, and that'll change as the cost models and other factors change as well.
So watch this space. Josh, thanks so much for sharing your insights, and look forward to catching up with you further down the line.
And thanks again for having me.